Hey everybody, what's going on? It's James here with Crypto Common Sense. I wanted to shoot a new video for you guys today. I shot a market update video a few hours ago. Hopefully you checked that out. If not, make sure you check the channel for that video. But I also want to do a video about technical analysis because somebody asked me a question earlier and they pointed me to a video that somebody else had done giving some really bad advice. So I think with trading, and especially with crypto trading specifically, a lot of people know just enough to hurt themselves. And this reminds me of when I was a kid, maybe 10 years old or so. I saw a commercial on TV. They were selling VHS tapes, and this guy would teach you how to do karate. And I was a smaller kid, so I thought, man, I'm gonna learn to do karate so I can protect myself. And I told my dad I wanted to get this VHS tape to learn karate, and he said, James, you're gonna learn just enough to get yourself hurt. And I remember at the time it kind of made me mad because I didn't think he knew what he was talking about, because that's how kids are. But as I got a little older, that saying became very profound, and I noticed it more and more throughout my life. And trading is the same way. People learn just enough to get themselves into trouble, and then they start spouting this stuff to other people, leading those other people off of a cliff. So here's what's going on, guys. I'm going to get rid of everything on this chart. I want a clean chart so I can show you some stuff and hopefully help you to make an educated decision when to invest in an asset and when to take profits on assets and things like that. So essentially it went like this. Somebody was telling people in this particular YouTube video that they should be long on Bitcoin right now because we had a retracement to the 61.8 Fibonacci level. Okay, so we'll draw these fibs real quick down around this level. Now on this chart we didn't quite get there, but that's not the point. On some charts we did, so that's fine. I'll go ahead and concede that we got to the 61.8, which is the golden reload zone. And if you guys watched my own videos over the last 3 or 4 months, you heard me talk about this over and over and over. That's a zone that I like to look for when I'm going to go long on an asset. The one thing that I didn't talk a lot about, and one thing that I guess I should have talked about more clearly, is I'm going to trade with the trend, guys. So what I was looking for was a quick pullback to the 61.8 and then a continuation of the trend. This is not a quick pullback. This is a bear market. This is a downtrend. So this is a key difference in this Fibonacci level. Let me show you what you want to see when you're taking that 61.8 position. You want to see something like this right here. This market was in a strong uptrend, right? Up, down, up, down, up. And this whole period right here from September 2nd to the bottom on September 15th, this was less than 2 weeks. This was a quick correction. And in fact, if you turn on the EMAs, not the volume, oh goodness, I should have had this set up before doing the video. That's fine. Let me just turn on an EMA real quick and I'll show you what I need. So let's turn on the 12 moving average on the daily. Okay. You can see we are riding on top of it. We broke south of it. That's a correction and popped right back above it. So when we pull back to this level right here, yes, that's a position that I'd want to take a long on. I was actually trading back then. I actually watched that happen in real time. That was a really quick candle. It only lasted a few minutes. But it popped down there and popped right back up. Okay. What you had was essentially a ton of people waiting to buy there. So you had a lot of demand and it pushed it back up and the trend continued. Now, what I want to do next is show you a key difference in an uptrend and a downtrend. So in an uptrend, the 61.8 can often be a beautiful place to go long. Okay, golden reload zone. Unfortunately, in a downtrend, it works the same way, only in opposite. So here we had our top, here we had our first lower high, and here we had our second lower high, which confirmed that right here, confirmed we're indeed in a downtrend. Okay, so let's draw a Fibonacci level from this swing high here to the swing low here, and let's see if we could have gotten a short going off of the 61.8 fib. So we'll draw this box from a 61.8 fib up to the 78.6. Bam, look at that. If you'd have went short on the 61.8, you could have caught a beautiful move down to this swing low. Now you wouldn't have got the whole move, nobody ever does. But essentially from that 61.8 fib, price dropped about 40% or so before putting in this double bottom. Okay, so it bounced back up, and let's measure this. Let's get rid of this zone, and let's measure this from the new swing high right here around 8,500 bucks or so. Actually, excuse me, this one was around 10 grand. Down to the swing low over here. And let's see if we could have got a trade off if we traded the 61.8 fib. And there you have it. Bam, right back up into the short zone. And if you'd have went short on the 61.8 fib that time, you could have caught a ride about 60 to 62% all the way to the bottom. Gonna say that would have been a pretty good trade, okay, based off of Fibonacci levels. Again, in a downtrend, the 61.8 can often be an amazing place to go short. What you wouldn't want to do in a downtrend is try to go long off the 61.8, okay? Let me show you why. Let's say that you decide you were going to long this sucker in a downtrend. So you measure this out, price comes over here, it's looking pretty good. You put your bid in, you're like, yeah, I'm going to go long on this 61.8, guys. So you go long right here, you get your fill, and you know your profit target. Obviously, if you think it's going to be a trend reversal, if it's going to start an uptrend, if you think it's going to do this, then your profit would be above, at the very least above this old high, right? So then you'd set a 2-to-1. Just a few weeks later, stopped out. You don't go long off the 61.8 in a bear market if you're smart, okay? Or in a downtrend. Bear market's just a big downtrend. Now, let me show you something that you may or may not realize. I've talked about this in past videos, but maybe you haven't watched my videos before. Maybe you didn't catch that particular video. Here's where things get pretty dicey. We're going to put this on a weekly chart so there's not so much clutter on there. We're going to turn off the EMA, and we're going to draw this from the top to the bottom. And we're going to draw a short zone using the 61.8 fib. That would be from this line right here up to this line right here, and we'll just draw it over. Oh, look at that. There you go. There was the golden short entry. If you'd went short there, you'd been short at 13,488. Which means that right now, if you were still in that short, you'd be up about 31%. Okay? So let's zoom in a little bit and let's look at the current picture. So here was our high, here was our first lower high, here was our third lower high, excuse me, our second lower high. This confirmed our downtrend, so let's draw some fib levels from the swing high to the swing low. Let's put it back on a daily chart. And let's draw a short zone from the 61.8 fib up to the 78. And there you have it. There's your golden short entry. If you'd entered on that 61.8 fib, you would currently be up about 11%. Okay? So again, we're in a downtrend. That's the reason that's working so well, the 61.8 fib. Now, if you don't believe me yet, which hopefully you do, let me zoom in and really paint this picture as clear as I can possibly paint it for you. So this is an hourly chart, and this was our pump up to 10.5. So let's draw a fib from the pivot high to the pivot low, and let's draw a Fibonacci zone. There you have it. If you went short on the 61.8 fib, you'd have shorted at 99.20, right there, right next to the top of that wick, and you'd currently be up about 7%. All right, but just in case you think that was a fluke, let's go ahead and draw this from the swing high here. Let's draw it down to this low, right? Because people are going to say, oh, you didn't know where the low was going to be. No, you didn't. Okay, well, if we draw it there, 61.8 fib is way up in this area, so no trade. New low, did we get to the 61.8? No. Let's draw it to the new low, 61.8? No. Draw it to the new low, 61.8? No. This is about being patient, guys. This is what being patient is. You just keep moving this over like this, and just keep moving it over. So here's the low. Still no trade based off of fibs, right? Still not to the 61.8. So you just keep watching it. Now it's not making any lower lows, so we're just leaving our Fibonacci levels alone. We're just patiently waiting. And what we're looking for is we're looking price to get up into this boxy area here at 61.8. And there it happened right there on a wick. Notice that's almost always on a wick, right? It's being shoved back down. That, my friends, is a sign of supply. It's a sign of people waiting to sell when price gets to that level. And that's how you can tell when you're in distribution versus when you're in accumulation. If you have the opposite, it's demand, but this is supply. So if you'd have shorted right there and you were still holding that position, you'd currently be up about 3.7%. Now, if you're not a believer yet, let's just keep going. So now we have our new swing high right here. And let's go ahead and draw this to our swing low right here. And we'll connect this to that candle tail. And we will draw a box. There you have it. Holy shit, what do we got? We got a wick that came up into our short zone and then it dumped. All right, let's draw a new Fibonacci level. Let's draw it on this swing high and let's draw it to this swing low. And let's draw a box. And what do we have? Holy shit, a wick that barely touched the 61.8 fib and we dropped. Why? Why is this working like this? Why is this over and over? How can somebody sit here? By the way, if you took all these trades, you're talking double-digit gains during this range, okay? Double-digit gains in that range. So now the deal is you understand that we're in a downtrend, that every time it touches that 61.8, it's being shoved down. Okay, and on the flip side, look what would have happened if you would have tried to take a trade and went long. Let's say that you drew your pivot low to your pivot high, and you said, okay, here's my 61.8 fib. I'm going to long this sucker right here. Oh, look at that, James. It's a tail. I'm going to long it. Well, you would be longing it because you want this to be an uptrend, which means your long would be, your target would be above this, right? Let's say your target was even with that, okay? So your stop loss would be down here somewhere. You never got there if you entered that trade, and boom, would have been stopped out right here. Look at this. You would have entered on that 61.8, you would have entered right around 9,300 bucks. Yeah, eventually it popped up a little bit on a wick, and maybe you could have got out for a small profit. But remember, if you're going long in that level, it's because you think you're in an uptrend, which means that you'd be waiting for price to make a new high, and it hasn't done that. You'd still be sitting in that trade, and you'd be down, okay? Versus if you traded this as a bear, and you flipped it around where you were going short at the 61.8, you could have made double-digit gain, big gain, big gain, big gain, okay? So now let's zoom out, and this video is not about making price predictions for Bitcoin, but it is about making you understand something. A lot of people are very, very bullish right now, but if we draw a channel, this is the channel that I've talked about in a lot of my videos, is this channel right here, okay? Looks something like this. And we're in a downtrend, so that's why I'm playing the 61.8 as a bear. But guys, if you really want to be, if you want me to be brutally honest, that's not the actual channel we're in. It's the smaller channel, but if you want to be brutally honest, I'm going to show you the real channel that we're in. That's the real channel that we're in right now, okay? And again, we know that because if we draw the Fibonacci levels, it came up to the 61.8. We had a huge, massive amount of supply, and boom, it got shoved back down, okay? So no, when you're in a big downtrend, going long off of the 61.8 is probably not a good idea, okay? If this had been a quick correction, then this could have been an uptrend and we could have broke out of this channel. But for right now, 61.8 is not something that I'm super keen on going long off of. All right, and again, this isn't about price predictions, but just understand that it's entirely possible we will revisit the bottom of this channel before this is all said and done, which is down, way down lower than people think Bitcoin can go, okay? If we zoom in real quick on a daily chart, I'll show you what I'm looking for to turn into a bull. If we draw this from here, our swing low to our swing high, our 61.8 is 85.35. Doesn't mean I'm going to go long here, but if this thing drops down into this reload zone, it puts in some type of bullish structure, like some type of W, for example, and then it makes a new high, higher than this, that will give us high, higher low, higher high, and I will be looking to go bullish on the next pullback. And then if it breaks out of that channel, then all bets are off for bears, and it's time to go bull. Okay? But this is not about price predictions. This isn't even really about Bitcoin specifically. It's just about understanding that, you know, people have learned, a lot of people have learned that, hey, the 61.8 is the golden ratio. But they're not taking into consideration which way the trend is going. There's a reason that the saying is, the trend is your friend. You don't fight the trend. If you're in a downtrend, you should be looking for short positions. If you're in an uptrend, you should be looking for long positions. Okay? With all that being said, please remember I am literally some guy sitting in a spare bedroom, so nothing in this video is financial advice. You should always seek out professional investment advice before making any type of investment. If you enjoyed this video, please be sure and give it a thumbs up. Also, don't forget to subscribe to the channel, and don't forget to check the description for links where you can follow me on Twitter, TradingView, and where you can join my free Facebook group, as well as where you can find some links to support the channel. This is James with Crypto Common Sense. Trade safe.